This is week 1 of investing every week. I like transparency around money and investing since there's a lot of scams online, and I wanted to start this series just to give others motivation as well to start investing and look at their finances more holistically and actually more realistically. For this week, I have $400 to invest plus $7.26 that were left over in this account, and we're going to make the best use of this $407.26. My first investment is going to be in the S&P 500 or the 500 biggest companies in America. This index has returned an average of 10% over the last decade, the last 2 decades, and even the last 4 decades now. I choose to invest in the S&P 500 through this ETF called VFV, a Vanguard product, but you can use any ETF that you want if you also want to invest in the S&P 500. Since I only have $400, I'm going to buy 1 share of this ETF. Queue the order submitted, and since the market is closed, it's not going to execute immediately, but trust me, I did buy it because you can also see the available cash goes down to around $200. My next buy is in the NASDAQ 100. Like the S&P 500, this is an American-based index holding 100 of the biggest companies in America. This is primarily tech-focused with a large chunk of the ETF being in Nvidia, Apple, Microsoft, and other tech companies. If you think tech is overvalued and don't see tech adding value in the future, you might want to stay away from this ETF, but for me, who thinks that tech is the now and the future, I like this ETF. Everything that I use is tech, from this laptop to my phone to this camera to this mic. Tech companies are adding value left, right, and center, and will continue to do so, according to me, not financial advice, in the future as well. I'm going to go ahead and place an order for 1 share of this ETF HXQ that tracks the NASDAQ 100. You can invest in any ETF that you want to. You don't have to invest in this one. So 1 share, $81, queue the order. Done. My next buy is going to be in a leveraged S&P 500 ETF. S&P 500, as we've seen, has returned 10%. An element of leverage adds on to that. For example, this ETF, USSL, is 25% leverage, which means that, let's say that in a year, the S&P 500 returns 10%, this is going to return 12.5% minus leverage costs, since the fund managers have to pay interest for the leverage that they take out. Assuming that leverage cost is, for example, 0.5%, you'll get a return of 12%. So your returns are magnified. However, on the opposite end, if the ETF actually returns a loss, let's say the S&P 500 goes down 10%. In a particular year, you are going to be down 12.5% plus that leverage cost, so around 13%. You can see the pros and cons of this, but for me, a long-term investor that believes in the S&P 500, adding modest leverage adds on to those returns, and I can withstand those peaks and valleys when it comes to the short-term price performance. I'm going to place a market order of 2 shares, roughly $50, all that chat for $50, but every single dollar actually matters. And there you go, the order has been placed. My next buy is going to be in the Canadian market through this ETF called BDY. The Canadian market, particularly the TSX 60, has lagged the American market in the past few years, but with the Bank of Canada cutting interest rates, the stock market has seen a nice recovery. In the last 3 months alone, it is up nearly 9%. It also pays a healthy dividend yield of above 4%, which adds on to that nice return. I'm going to buy 1 share of BDY, roughly $50. There you go, $72 remaining. Money is evaporating before our very eyes. My next buy is going to be in a leverage all equity ETF. This ETF tracks not just the US market and the Canadian market, but also international markets. Adding on leverage to that, we know what leverage can do. Diversifying is also good when it comes to involving the international markets. Perhaps your return is not going to be extremely high since you're not investing in just the US, but the risk profile is also lower since you're extremely diversified. Leverage also recovers some of those lost gains, and I think having this balanced approach might pay dividends in the long run. 2 shares, maybe 3 shares. Don't have the money. So I'm going to buy 2 shares of HEQL or this leverage all equity ETF. My last buy is going to be in a covered call ETF tracking the S&P 500 through this ETF called HYLD. This is also a leverage ETF, adding on a bit to the return and the dividends received. However, the covered call strategy that this ETF employs sacrifices some long-term potential growth for income now. I know that and I understand that, and I still choose to invest in this, at least $14 worth of, just because I think that income is a motivating factor that keeps me motivated, that keeps me interested in investing. It helps me save more, it helps me invest more, and it helps me stay focused on the long-term goal. And I'm not gonna lie, seeing that monthly income go up is which is nice. Not just motivating, I just like that feeling. So I'm gonna go ahead and place an order for 1 share. Hopefully this goes through, and it did. Now we only have $2 remaining. All our money has been taken. Just kidding, we've invested it. So that's it. Those are my buys for this week. Let me know what you bought. Let me know if you agree or disagree with my buys. And as always, smash the like button and the subscribe button if you enjoyed this video and you like transparency around money and investing. Since, like I said, my purpose is to be transparent around my financial journey, the things that I've learned and the things that I wish I didn't do, just in the hopes that someone might get motivated and also avoid those mistakes. I hope you enjoyed this, and I'll see you in the next one.